You're watching Clean Skies News. I'm Tyler Suiters, along with our regular energy market analyst, Elliott Gue, from the Energy Newsletter and the Energy Strategist. Good to have you with us again, Elliott.
Thanks for having me.
Let's start with oil and the impact we're still feeling from the Gulf oil spill. Prices down somewhere in the 70s right now.
Yeah, we're well off our highs, and I think a lot of the decline we've seen in oil is probably due to what's going on in the broader stock market, as well as what's going on in Greece right now. There is a fear that contagion that has been sort of isolated in Greece and some of the other sort of periphery countries in Europe might spread and start to infect, say, the interbank market again. We might get a secondary credit crisis. I don't think that's going to happen, but that's kind of the fear that's out there. And that's been hitting all risky assets, of course, of which oil is one.
Mm-hmm. Yeah, the whole country, if not the world, is watching the spill in the Gulf right now. But then we see for just about an hour or two yesterday, Wall Street having that big drop and taking oil prices with it.
Yeah, absolutely. And you know, a lot of what happened yesterday was sort of a technical problem. There's a rumor out there that a trader at Citibank keyed in, a billion order instead of a million. A so-called fat finger trade. We saw, within 10 minutes, the market moved from down. The Dow moved from down sort of 300 and something to down 1,000 nearly. Mm-hmm. And then it came right back. So that does indicate it was probably a technical problem. But that's certainly what's weighing on oil prices, I think, more than anything. The spill is something that I think is going to have a longer-term impact on oil prices. But right now, they're focusing on the stock market and the economy. And
another factor, as always, the strength of the U.S. dollar, which is picking up ground on the euro yesterday and also picking up on the pound in the wake of the British elections.
Right, and that could be something you continue to see because the euro had been very strong, obviously. It has strengthened considerably. The dollar has strengthened considerably over the last several months, and it's really all, again, has to do with Greece and the potential even for Greece to eventually maybe even leave the Eurozone. So there's just a lot of uncertainty around that, and that's going to continue to put pressure on the euro.
Conflicting pressure, on the other hand, for natural gas right now. The latest inventory report from the IEA has inventories up, no surprise there. But then the economic reports we're getting on the strength of the U.S. economy, driving prices back up.
Right. We've seen natural gas hold this $4 area pretty well. It dips a little bit below that, but it seems like that brings in some buyers and we get gas prices back up. The inventory situation or the storage situation is not good. We have a glut of gas and storage. A good bit of that has to do with the weather. We had a very, very cold winter, but we also had a very mild spring across much of the U.S., unusually warm temperatures. And that's allowed gas and storage to build up a lot more than expected. But you're right. I think the economy is something that's going to play into that a lot more. Not only are we seeing increased industrial demand for natural gas, but we're also seeing probably increased electricity demand for natural gas as it's substituted for coal. And I think the other thing that you're seeing is that a lot of gas drilling activity in the United States isn't really gas drilling activity. They're targeting natural gas liquids, and they're targeting oil-rich gas.
Well, I wanted to ask you about the switch to oil as well, because Devon Energy out of Oklahoma is the latest company to very publicly say, yes, we're primarily a natural gas company, but we're looking at oil as well.
Right. I think you're probably going to hear more about that. A lot of the E&Ps that have reported, the exploration production companies, have emphasized on their conference calls the liquids portion of their portfolio. So even some of the plays that are very hot right now, like the Eagle Ford Shale. Mm-hmm. The Eagle Ford Shale is one of those shale plays where the northern part of it is really an oil play. And then you have a sort of central fairway of the play, which is just wet gas. So it's natural gas, liquids, and gas. So even though people think of that as technically a gas play, the reality is there's a lot of liquid in there. And you're going to hear a lot more of these exploration production companies like Devon. EOG's been doing it for some years now. But Petrohawk and guys like that, they're going to talk a little bit more about the oil side of that business and natural gas liquid side of that business.
All right, Elliott Gue always tracks the trends in the energy commodities markets. He is editor of the Energy Letter and the Energy Strategist. And Elliott, it's great to have you with us again.
Thanks for having me.
Okay, and thank you as well for joining us. I'm Tyler Suiters. You're watching Clean Skies News.